Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello, everybody. My name is Debbie from NDIS Property Australia, and you're listening to the SDA Housing Podcast, a show that explains, highlights, guides, and brings awareness about all things SDA in this ever-changing world. Now, having said that, this is the SDA Housing Podcast. Today, we are going to be bringing you something a little bit off topic, and this relates more to our parent company, Build New Homes. And I'm going to hand over to Ian, who is one of our team members, to introduce you to our guests and to the subject we're talking about today. Ian, over to you.
Hi, thanks, Debbie. Thanks for that introduction. So, yes, you did mention it's a little bit out of left field. And look, I'll give you a bit of an idea of how the string worked. We were talking about fractional investment in the SDA space. And coincidentally, as we were talking about that type of introduction to investing, at around about that $60,000, $70,000 mark, we ended up having an introduction from Larissa about fractional investment in Bali. And so obviously we were excited about that because the level that you can enter into that was very compelling. And we feel it's our duty and our remit to offer our investors and our listeners an opportunity for high yield investment. And this could very well fit in with any of our listeners' portfolios as an addition or instead of. So today, obviously, we're going to, myself and Rob Maxwell, who many of our listeners have heard before. He's from the finance and property background. We're going to have a chat with Mark Reed. Mark Reed's over in Bali. He's the international sales manager and he deals with fractional investment. And of course, if you don't want to do fractional investment, you can purchase a property in Bali in full. So I'm going to I'll start the process. So Mark, I've read a little bit about you. I've seen you on podcasts and video webinars. Can you give us a quick rundown of where you are at the moment and a little bit of a brief history of, like who, when, and why?
Yeah, absolutely. So thanks very much, everybody, for having me on the podcast. Really, really great to be able to discuss a topic and a business model that we've been working out here over in Bali for quite some time now. So again, my name's Mark Reed. There's 30 years of commercial and traditional real estate sales and marketing behind me. The company that we have over here is an Australian company based in Bali, serving predominantly Australian investors that are trying to obviously get a greater yield and get a price point that they can afford. We all know that the Australian housing market is different these days. Let's put it that way. It's very, very different. It's very unaffordable for most people. It's prohibitive for the next generation. Interest rates have done that. The housing crisis has done that. Building crisis has done that. There's a litany of elements that have put people that are trying to use their money or use their equity into a position where it's now, what do I do with it, right? And obviously, being on this podcast, we're talking to an audience that are very well aware of those particular elements. But here in Bali, seeing as how we were already property marketers and property sales team dealing with Australians and selling Australian stock to Australians for the last 8 years, what we've been able to understand is that with that change in the Australian property market, there had to be some innovation. We found it on our doorstep right here in Bali. Coming out of COVID, we realized that there was incredible yields to make in the hotel space or in the tourism accommodation space with incredible ways to innovate it. And so we've come with that Australian feel and that native approach to investing to make the whole process over here in Bali feel not just native, but very much encompassed with professionals, network of finance professionals, real estate professionals, hotel professionals. They all make up the GeoNet Properties company. And we're glad now to be able to properly introduce fractional investments. Fractional investments are percentage investments, very different to the timeshare concept that most people get this mixed up with. It's a very, very different model. Timeshare is quite specifically a holiday club with no dividends and no ownership of anything, just rights to go and stay in hotels. This is very, very different. This is actual ownership with an actual title, a lease title, and also a management company. And we've managed to really delve into the best possible property investment stock on the island, and have gotten ourselves quite a reputation by doing so, like a very good reputation. We work with some amazing international branded hotels and the best developers on the island. So it's now time to let Australians know a little bit more about that, even though we've been featured in the Australian Financial Review recently, as well as Forbes. This is a concept that really is an open-handed or an extended arm of assistance to investors that probably have counted themselves out of the market.
Rob, what do you take away from that? Because obviously Mark's going over a few things there about selling to Australians and having a product on the doorstep. What do you think you'd like to delve into there quickly?
Yeah, hi, Ian and Mark. Thanks for having me, and very interesting topic. Ian and I have discussed that we're both very pro-Bali in terms of we've both been going there for a number of years from a holiday perspective, so I understand it quite well. I think we've both dabbled in timeshare in the past, so we were very open to looking at this as an investment option for clients. And we saw that with what's happening in Australia, as Mark mentioned, in regard to the high cost of SDA housing and the prohibitive ability to be able to fund it now from a financing point of view, that this could really complement the existing investors or investors that couldn't do SDA as an alternative. So we're keen to do the due diligence on it, which we have, and we're very comfortable with it and think that it's got a great future. Both Ian and I and a couple of the other team from Build New Homes, including Debbie, are looking to come over to Bali in the next few weeks just to complete that due diligence. Now, Mark, why Bali as an investment option for Australian investors? Are you able to just give us a bit of background as to why it's such a good option at the minute?
So the statistics that we survey every day, every waking moment, just because we're data geeks over here as much as we are property enthusiasts and investment enthusiasts, we are glued to the data. And that data has definitely shown that year on year, even since before COVID, but after COVID, we're now at 20-30% more tourists here since 2019. And year on year, it's growing. There's billions and billions and billions of dollars pouring in from investors all over the world into Bali. And we're just seeing that obviously once, these millions of people, we're talking now about 14 million people per year jumping into a tropical island, which is only 150 kilometers east to west and 100 kilometers north to south, coming here to spend the best times of their life, a cultural experience, a getaway. For whatever reason you come here, it is the most Instagrammable, it is the most searched destination, it is the most traveled destination on the face of the planet. It's just it's just a hop, skip, and a jump from Australia. It sits right in the middle of Southeast Asia, so it gets literally the best of the world's tourists to come during their holidays, because we have an average daily temperature of 30 degrees every day. And nightly, it might drop to about 24, and that's all year round. So we don't have seasonal issues for tourism. And it's also underpinned by 60% of all tourism is actually domestic. So it has a hugely, hugely popular destination for the Indonesians themselves. And that gets stronger and stronger. We've seen over 30 new flights per week added to the to the arrivals from countries now such as India, Dubai, and these places are now directly linked weekly, daily. So tourism levels go up, demand goes up, occupancy goes up in hotels. nightly room rates go up in hotels. But there's also, from an economical point of view, a very, very long history between Indonesia and Australia, allowing non-double tax treaty to dictate that you can invest your money with ease here and not be double taxed in your own country. And that has been in place now for over 30 years with actually over 38 different countries around the world. Indonesia is a very, very good place to invest. Still, you do your due diligence, but if you also have a team like ours in place to make sure that you can understand what the actual property laws are here, what the investment laws are here, how to make sure that your investment is safe, and also to have a team on the ground that are totally investor-centric rather than sell the property-centric. So for us, Bali was one of those perfect storms when the rest of the Western world is suffering for, just like Australia with their property market. It was just that perfect storm. We were right here. We've got years and years of experience in it. It's right on our doorstep. We already have a prolific reputation as property marketers throughout Australia and Indonesia, and also in the States as well, and to some extent also in the UK, that these developers were thinking we just needed a change. And so we went into a war room kind of situation for the better part of 9 months, into a conference room with all of these people, major developers, hotel owners, builders, billionaires, entrepreneurs, our own team, the council, the local councils, the tourism ministers. We sat in this war room and rotated these people in and out, in and out, and in and out, and came up with the right model that allowed Australians and the world over to dabble at their own price point into very, very high-yielding properties with a very, very, with not just high-yielding, but properties that escalate or compound with at least 5% growth every year.
Can you talk, Mark, a little bit more about the infrastructure changes coming in for Bali, and maybe give a very brief overview of what risks the investors would be wanting to be aware of and how you mitigate against those?
Okay, let's start with infrastructure. First of all, it's, we have an international plane landing every 8 minutes here. So it's a very busy airport already. I think it's like 8 times or 9 times more busy than the Perth airport. That's quite a busy airport.
Yeah.
And it's just a little rock here. So yeah, there's a lot of new tourism coming in. There are talks of a second airport, have been talks for quite some while, but now it seems that there is a rapid expansion and a rapid push from a government level. In fact, the current Prime Minister is promising that they will go ahead with that within the next 5 to 10 years. Who knows? But it is definitely on the budget now. There are also light rails planned. A railway in Bali. I never thought I'd see that happening. Never thought I'd see that even imagined. But it has actually not only been awarded to a contractor, but it has started. So the planning is not just
broken ground.
Yeah, they've broken ground. So we're in anticipation as to how that works. But that's echoes the amount of awareness now that Bali and the Indonesian governments have for sustainable growth. Okay. And sustainable growth means better infrastructure. Let's talk a little bit more to the actual risks that people might be coming over and being unaware of. We're very aware of the risks that Australians and international investors come over and say, right, I want part of this gold rush. I'm going to put my pan in the water and just start sifting gold out of it. It doesn't work that way. Again, you have to be aware of the data. You have to be aware of the trends, and you have to be aware of who you're dealing with and why you would be dealing with that person, and whether or not that particular developer or that particular property agent or that particular builder or salesperson might be a little bit skewed to tell you that there is exceptional ROI when you buy their property. So we're seeing, since COVID, we've seen 8,000 villas delivered. 8,000 villas delivered. There's another 1,500 of them coming by the end of the year. The numbers that these villas were earning will no longer be the case because it's an Airbnb market, and that Airbnb market is, first of all, going to cannibalize itself. But at the same time, these 8,000, you can't build 8,000 villas in the prime tourism zone. It's just not available. That space isn't available. So you've seen the spread of the Bali property market go out into the residential villages. And these aren't necessarily great places to experience Bali. If you're coming over for a holiday, there's no footpaths, there's no shops, there's no cafes, there's no restaurants.
Yeah.
And in a lot of cases, there's no surf, right? Because you're maybe 4 or 5 kilometers away from the beach. So it's not like you're going to walk down to the beach and enjoy all you've got is a little villa or a nice big villa for whatever reason, but that's your stay. You will then have to deal with the traffic wherever you go to try and enjoy your holiday. I mean, it's the same story for the entire property market. Location.
Yeah.
And what we know is if I'm coming over to Bali, and I've been coming to Bali, I've been here now for 8 years, but I've been coming to Bali for 25 years. And Australians that I've been selling properties to have been here for as many years, or have been coming back for as many years as 40 years. They don't deviate from where they feel comfortable, even though they love to go on the road trips or on the day tours or visit certain different parts of Bali during their stay here. It still has to feel like you're in a holiday zone rather than in the middle of a village, which is overbearing and bursting at the seams with new property development that is not going to be sustainable for long-term ROI growth.
Would you say that risk that you're talking about, identifying where the Airbnb type format is going into areas where they can, obviously there's availability of land and property, would you say that risk extends to certain hotel developments going out away from the main centres, and they would experience the same kind of problems and challenges without the infrastructure to support?
So it's interesting, right? Hotels have to be zoned. There is a wide misconception that Bali doesn't have any development zones. It actually does. But when you're talking about hotel zoning and hotel building zoning, it has to be in tourism areas. It has to be in high population, in high demand areas.
Right.
And therefore zoning is rare for a hotel. So if you get hotel zoning, it's a really, really good investment for starters because it's backed by the government.
Right.
Whereas if you're going into these villas or into that Airbnb villa market, any rice paddy is yours.
Coming on to property selection, do you think that that's a big factor that you would want to help people identify as to the type of property they would need to invest? I come to this from the perspective of, if we're talking to you and your company and we're saying, okay, what do you have to offer? Our investors are out there thinking, well, why would I come to you? Why wouldn't I just go to somebody else? I know a friend of a friend or, a cousin that has a development and they're going to be coming in at a lot cheaper, paying local prices, etc. Do you think that you have something that maybe gives the Australian investor a better outcome based on your selection of the type of projects you work with?
Yeah, I just want to be clear about our selection process. To start this off with, I put developers through a 35-point due diligence test through the lens of a potential investor. That covers everything from location to legal parameters to building permits to developers' history to developers' bank balance to their previous works to their marketing knowledge and their marketing preconceptions of the area, all the way to who the management company are, what the management contracts look like, and many, a litany of different of listed due diligence points that I go through. So for us, and kind of interesting, on my WhatsApp thread at 12 o'clock last night, I was being offered another 3 different developments,
right,
by an American investor or / developer. And I want to be clear about this because this is probably 65%, maybe 70% of my job is doing due diligence on developers that I don't necessarily want to cause a war with, but I have to somehow let them know your bubble has burst. You're just developing so you can get rich. You're not holding any of your own stock. Therefore, you're not caring about the long-term rental yields. And these are the reasons why we can't get involved with you. Or please send me all of your PDFs, all of your design, all of your files. I'll go through them. And then, cut a long story short, generally I end the conversation after a brief summary and show them the due diligence points that they have to go back and work on / reconsider their entire business model on. So does selection come into it? Yeah, absolutely. Absolutely. And I get a range of different types of investors that have different motives. Some of them want to retire here. Some of them want to live full time here. Some of them want to spend 3 months of the year here. Some of them only want Seminyak. Some of them will only consider a villa. But really, when I boil it down with them, I'm trying to find out whether or not they're doing it for their own retirement purposes, for their own wealth creation purposes, what that wealth creation looks like for them so far. What have they invested in? Where are their pain points? And what exactly do they see themselves needing to have in retirement? In most cases, my clients generally range from about 40 years old to about 55 years old. Some are younger, but those that are thinking investment really appreciate the amount of science that we put behind selecting property for their best interests. And we will select the property based pretty much on their financial goals. What are your financial goals? And then I can show them through ROI simulation and through rental simulations what we can start to expect this could do for them in an environment of foreign ownership, what this could do for them financially, how they could use that money, how quickly they can actually use this incredible cash flow to smash down their mortgage, and also a range of different other lifestyle benefits. But it always comes down to more money in your pocket means more freedom, means more ability to actually enjoy your life. And it just so happens to come with the perks of being able to stay in your own property as well when you come over here. And that in itself can save a family $5 to $7, maybe even $10,000 a year just in accommodation, let alone making them $30, $40, $50, $80,000.
Great, Mark. Now, let's maybe just touch on the actual investment opportunity itself and a couple of the key differences to what listeners would usually be used to with the Australian market. It is very much more an income-driven investment that's very attractive in terms of returns. But let's just discuss and let the listeners know that the difference between the fact that this is a leasehold investment versus what they're used to in Australia, where it's a freehold investment where they own the land forever. You're able to just touch on the differences there and why it makes it very attractive, because it certainly brings down the price point that people can get involved with this.
Yeah, I mean, I break this down for clients all the time. We've got podcasts about it. We've got blogs about it. We've got also another 1,000-odd investors from Australia that understand that this is a yield play, right? It's not a capital growth play. However, I do want to be very much quoted by saying there is a yield play in these properties, of course, as there is in building a business, and that business is earning a great cash flow. So does this business of property investing in a leasehold environment really stand up to a capital growth, but especially a yield. Now, a leasehold ownership is the proposed method of investing here, simply for the one reason that Indonesians can own freehold property and they can also lease it out to foreigners. And the foreign ownership model of leaseholds has been extremely profitable. Leasing a piece of land is far less expensive than owning the land freehold, even if you could own it freehold. So therefore, we're talking about extremely low entry prices, because you don't have to put up that 60% of your entire purchase for just acquiring the land. And we're able to, if we're choosing it right, if you let the team at GeoNet and Build New Homes guide you through property selection, we're choosing properties and we're selecting these properties based on the fact that the land component is so cheap, but the ROI and yield on it is so high that it becomes that perfect way of paying for your lifestyle and paying for your smashing down your mortgage and retiring very, very quickly, or very wealthy with an incredible cash flow. So leasehold is the only foreign ownership model. You can own freehold as a foreigner if you have an Indonesian company registered. And that then has another set of parameters. It is a cheap way to play the freehold game, but it has no long-term or it has no immediate benefits if you're wanting to get into cash flow property very, very astutely the way that we play the game. So you can register a business over here. We do assist with that. We do have partners in that space that will allow you to put your assets into your company structure here. Tax benefits apply. But in the leasehold environment, I want to bring a simple example to your attention. We all know that land appreciates, and everything on top of that land, it depreciates. Simple tax depreciation model, right? You can do that here in Bali, but you're depreciating 75% of your purchase value.
Okay. Yeah, it's a very powerful from an investment point of view, what you can do with it.
So we have tax depreciation schedules from quantity surveys in Australia, and these ones will quantity surveys will supply you with the tax depreciation schedule for your Bali property. You're earning an incredible income from it, but you're also you're depreciating it in your tax to 75% of your entire property purchase over here, earning 15 to 25% net.
That's very compelling, very compelling.
So it does come down to a play where you have to have the right advice. You have to have the right team in your place that will do that 35-point due diligence, but will also make sure that everybody in your sphere here is on board with you. Our business model is very simple. It's quite simple for you guys to understand and all of your listeners to understand as well. When you win as an investor, we win because we know you'll come back and we know you'll tell your friends, and we're doing a great job in selecting all of this. The data never lies. So for us, it's a matter of you don't have to come over here and spend your life savings. You really don't. You can start with $40,000.
We've got about 15 minutes left. So in tying this,
I can talk all days about this, guys.
Well, I kind of do, having watched your podcasts, which is why we've done this format, so we can actually cover the things that we think that the listeners are most interested in hearing. And obviously, there's going to be gaps. So myself and Rob and a couple of other members of the team will be coming over to meet you face to face and going through extra things and seeing it in the flesh. Rob, is there anything else you want to cover or you would like to ask, just based on the fact that you have a finance and a real estate background? Anything that you'd like to cover in the next, say, 5-10 minutes?
Yeah, no, just for listeners to be aware as well, what Mark's talking about is that these investments that are based on the hotel properties are based in very desirable locations for tourism. We're talking about right smack in the middle of Seminyak, 500 metres from the beach, right near all the plazas. So we're not, as Mark talked about, we're not talking about in the rice fields with no infrastructure. It's exactly where everyone wants to be, which is critical, which then underpins the occupancy rate, which then underpins the risks in relation to how much the investors are going to get as a return. So we love that. But you touched on it briefly, Mark. The other difference with this, which is being introduced with SDA as well, is the ability to do the fractional investment. So you able to just give a brief understanding what we're talking about here, whether it's 10%, 20%, 25% of a property that can be basically sliced up and reduce the overall risk for the investor?
Yeah, so we just understand that first foreign investment is sometimes fraught with a lot of anxiety and people don't necessarily want to part with too much in their first investment, but they might want to go all in because they understand it and they trust us. They might dip their toe in the water for $40,000. It comes with a management contract. It comes with a leasehold contract that is yours. It cannot be taken away from you. It is notarized by a representative of the Indonesian government, and therefore it can't be taken away from you. It is also willable. You can keep it in your estate because it has an extendable 30-year leasehold. We are talking exceptional growth opportunities on the capital growth front, but up to 50, 60 years of leasehold opportunity at a very, very small price in the prime spots with the best locations and incredible developments, 5-star facilities, 5-star hotels and resorts amongst everything. But yes, we love the fractional model. It served a lot of our Australians. I have some fond memories of Aussies that have said, Mark, this is the only way I can get back into the property market. I'm capped out. I don't own that much. I've got 3 children. All I can possibly do is use this fractional model to hopefully get back into the market. And it's been moments like that, and I have them at least once a week, where that fractional model is something that has saved somebody's apathy and also anxiety about what they can do with $100,000, $50,000. If you've got money in your self-managed super fund, it qualifies.
We certainly have a number of people in that space that are looking. They've been told, look, forget SDA, you're not going to be able to invest. It will be fractional investing at best. And then obviously when you look at fractional investing in SDA, you're looking at yields of around about 11%. But if you can get better than that, that's something that's very, very compelling. Just touching on the fractional, Rob mentioned, the kind of increments. What would you say is the minimum percentage ownership of any particular property that our investors can look at?
So we can have a 10% investment in a hotel villa, so a resort villa, 10%. You can have a 25% ownership of a hotel room or studio, and that starts at either for the hotel studio as low as $40,000. That's no more to pay, by the way. That's taxes included. There's also another thing that we haven't mentioned here is we pin all of our developers to paying 8% back to the client per annum, per year during construction. From the moment that you make the transaction, the developer is then under the pump to make sure that you have 8% during construction. Again, that was something that we probably could have brought up a little bit earlier, but these are the types of things that we put out on our developers to make sure that the cash flow is there from the day dot. Even if the property is about 6 months away or 18 months away from being completed and operational, you're earning 8% during construction.
So in contrast to somebody that was thinking about using their super or whatever cash is in their offset account, and they're going to invest in a property, normally in Australia, they're going to get zero. In actual fact, they're going to have the holding costs of that borrowing in any of their typical investments. But in this fractional investment model, they're going to earn 8% back over the entire construction period.
That's right. And we've got hotels opening in November, December. We're having one open this month, probably first week of August. We've got another one that's opening in November next year. We have another few hotels in the pipeline that will be built over the next 2 years. So yeah, this is the great way. Again, buying off the plan obviously gets you in at a very, very low rate, right? We have a bulk buying capacity here, so we're getting incredible rates, and you do see high capital growth between off the plan and then delivered. So that's a great thing as well. The other thing that we should mention.
So somebody can actually sell you, because you mentioned the capital growth. So somebody could sell their leasehold interest.
Yes, absolutely. Happens all the time. And we have a large pool of investors that are only too bullish on this particular type of investment model because it's a home run and it's very, very high cash flow. So we have a very big list and growing list of investors that we would sell it to very, very quickly. If you needed to get out, let's say in 6 years' time, 7 years' time, 2 years' time, 20 years' time.
Right. And another thing for listeners to be aware of, and a nice little added bonus, is that investing in this area gives you potential access to be able to use these properties. If you buy a quarter, 25%, you get to have 5 days a year where you can actually stay in these properties.
Yeah, absolutely.
Yep.
Absolutely. Yeah, I mean, there's a 1.2 to 1.4 million Aussies that come here every year, and this just really, really fits them. Like it's something that definitely ticks the boxes for those people. If you haven't been to Bali, I don't know what you're waiting for. But as a holiday destination with having a foothold in the property industry here makes it an incredibly interesting experience and very profitable one. I have investors in one of our projects that are buying one and living off the other in the same hotel.
Oh, wow.
So they can live in it. They can live in it as well. Just wanted to touch on releasing your dead equity that's in your home, equity that's in your investment properties, equity that's not necessarily serving you the way it should do. You can't pay the bills with your equity, but with cash, you can. So this is a major part of our business model. In fact, probably 60% of our clients are releasing equity out of property that they are obviously not getting any cash flow from or not enough cash flow from, releasing that equity, putting it to great use. We have podcast and a video presentation on our website about unlocking that equity so that you can smash down your mortgage and use it in a wealth creative way. So those are the things that are really alive for us, the problems that we've come up with solutions for. It's very much above board, and we are so happy to be working with you guys because we'd love to extend this. And obviously, if you are an owner here in Bali, we look forward to meeting you, showing you your property, showing you also the other properties that we have coming up. And we do put on a song and dance because it's always a pleasure to see Aussies come over here and take part of this opportunity that we've come across and just see it for themselves. And we have now, in the last 2 years, investors that have come back for their third and fourth property. And it might just be fractionals, right? Mm-hmm. Fractional ownership. But they're coming back and going, hey, I've just released another amount. I've just sold my car because it's not serving me. Or I've just decided that we're going to put a little bit more of our super in this. And they're already getting paid, obviously, their interest payments during construction. And that's exciting for people. And then they can see the CCTV online of the construction going up and going up and going up and going up. And that's really exciting. It's exciting for us. But, as you can see, I can talk about it for days. Luckily, they pay me to do so.
So look, we've covered today the brief history, who you're working with, why Bali, and some of the risks and how that's being mitigated and how it's sustainable growth. How you go about that selection process, and that's something we would definitely be interested in looking at once we get over to see you. The strategy of leasehold as opposed to, looking at the typical freehold process that Australians are used to. And then obviously the breakdown of how fractional investment, you can actually utilize either money sitting in your offset, money in your SMSF, or you can actually access equity at a property and get that lazy equity going back to work for you. So look, this kind of concludes what we needed to cover today. Rob, was there anything else you wanted to mention in closing?
No, it's a great introduction to Bali from Mark. Thank you. And for all our listeners who are interested in finding out more, and we'll obviously go into a lot more detail about how the investment can work, feel free to contact us via Build New Homes, and we can have a chat and look at how it might be suitable for your own investment decisions. And I'm excited to get over to Bali in the next few weeks, meet Mark and the team and have a look at these properties. But we're very keen and think that it's going to be a great option for our investors.
Great.
Yeah, we're excited to have you over here very soon.
Thanks for coming on, Mark.
My pleasure.
And Rob, thanks for your input as well. It's been fantastic having you, and I'm sure the listeners will remember you from previously and appreciate your input on this.
Yeah, it's been a couple of years, but if they've been around long enough, they'll remember. Thank you. Great. Well done, man.
Thank you, guys. So very interesting podcast, and I hope that our listeners got something out of that is obviously very different. And I'm also very much looking forward to being over in Bali in a short few weeks with the guys. So be Rob, Ian and myself, and potentially Min who'll be coming over to check out everything that's going on. So we're very excited about that. But I think we'll leave it there. And thanks everyone for listening, and see you next time.
All right. Thanks, everyone.
Bye, everybody.
Bye.
Bye.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.